Hello, everyone, and welcome. Today, we'll be focusing on the top 5 business and commercial banking trends in 2026. We at Alkami have surveyed over 150 digital banking decision makers across banks, credit unions of all sizes to tell us what business banking trends would have the most impact in 2026. Today, during this webinar, we'll reveal the results of that study and get real world perspectives from a panel of industry experts. So, my name is Taylor Adkins, and I'll be your host today. I'm joined today by Deanna Blaze, Senior Vice President of Business Services at Valley Strong Credit Union, and Bobby Everett, Chief Information Officer at Trinity Bank. Deanna, why don't you take a moment to tell the audience a little bit about yourself?
All right. Thank you, Taylor. Well, as Taylor said, I'm Deanna Blaze. I'm the Senior Vice President, Chief Business Officer at Valley Strong Credit Union. We are based out of California and at about a $4 billion asset firm. I do have a banking background, treasury management background, and retail and commercial and small business lending for the better part of 25 plus years, and have been in the credit union industry now for the better part of about 7 years. So happy to join this conversation with you today, Taylor and Bobby.
Yeah, thanks, Deanna. And Bobby, same question for you. It'd be great if you could tell the audience a little bit about yourself.
Um, Thanks, Taylor. I have been in banking fast approaching 30 years now. I've spanned probably every operational side of the bank. I have landed in the chief information role here at Trinity Bank. We are about a $550 million primarily commercial institution. So we wear all kinds of hats here. So Treasury and all of those things also kind of roll up to technology here. We're based in Fort Worth, Texas. And we've been in business a little over 23 years. We started as a de novo.
Okay, thanks, Bobby. And thank you both sincerely for being here. I'm really looking forward to hearing your insights as we dig into the top 5 business banking trends for 2026. But before we do that, we've got a poll for the audience. The audience poll question is: which of the following trends do you see as being the most impactful in 2026? Your options are digital onboarding in self service accounts, always on fraud protection, AI powered relationship management, real time treasury and payments, consumer grade banking experiences, API driven connectivity, data democratization for small businesses, mobile first treasury access, best of breed treasury technology stacks and solutions, and adaptive role based treasury platforms. I'll be especially interested to see how closely the audience voting aligns with the results of our study. And spoiler alert, the results are on the next slide. So I'll give the audience another 10 to 15 seconds to respond. And, obviously the audience is going to be really interested in Bobby and Deanna's point of view on this. But I'm going to put a pin in that because we are going to share their opinions throughout and also give them an opportunity at the end to call out the trends that they think are the most impactful for 2026 from their perspective. Now, assuming everyone's had a chance to respond to the poll, and I'm obviously trying to buy you a little bit of additional time here, I'm going to, without further ado, unveil the results of our study, which I'm thrilled to provide, and share the top business banking trends for 2026, starting with digital onboarding and self-service accounts. According to our study, end-to-end digital onboarding, customer due diligence and KYB, self-service commercial product configuration and entitlement setup, etc., is the top business banking trend for 2026, with over half of our survey respondents ranking it in the top 3. Next up is always on fraud protection. According to our study, embedded, proactive, and real-time fraud prevention detection, and mitigation is the number 2 business banking trend for 2026, with 50% of our survey respondents ranking it in the top 3. In third position is AI-powered relationship management. According to our study, generative AI tools and solutions that surface client insights and facilitate personalization and engagement, including cross-sell, financial alerts, and personalized service, is the number 3 business banking trend for 2026, with 49% of our survey respondents ranking it in the top 3. In the fourth position is real-time treasury and payments. According to our study, instant liquidity and real-time payments is the number 4 business banking trend for 2026, with 34% of our respondents ranking it in their top 3. In fifth position is consumer-grade banking experiences. According to our study, delivering business banking solutions that are as modern, intuitive, and dynamic as personal finance applications is the number 5 business banking trend in 2026, with 33% of our survey respondents ranking it in their top 3. Now, for the remainder of this webinar, we're going to dig into the top 5 business banking trends with our panel of experts. But before we do, I've got another poll for the audience. So the poll question is this: how would you describe your institution's approach to onboarding new commercial accounts? Is it an entirely manual process, mostly paper and email? Or does your commercial onboarding workflow include some digital self-service steps like e-signature, document upload, etc., but it's not fully end-to-end? Or is it mostly digital, but still reliant on staff for setup and entitlements? Or does your commercial onboarding workflow include fully digital KYB and onboarding with limited staff intervention? Or do you offer fully self-service onboarding and user-managed entitlements? Right? There's a lot of options there, and we'd like for each of you to respond. And while our audience is responding to the poll, I'd love to hear from our panelists. Starting with Deanna, how would you describe Valley Strong's approach to commercial onboarding and account opening?
Gosh, Taylor, this one has really been evolving for us. I would say, right now we're mostly digital, but still a little bit reliant on our staff and a team that, logs into a platform and can see the interaction happening when a member is choosing to set their accounts up online with us. We do have some KYB, KYC that's going on in the background to really help us with that. But depending upon the entity type, as you guys know, it can get a little complicated. So we see all different types, but it is evolving for us.
Sure, and Bobby, same question for you. How would you describe Trinity Bank's approach to commercial onboarding and account opening relative to this poll question?
I would say, given our current status, I would put us somewhere between B and C. We have some digital steps where some areas are mostly digital, but yet we still have very teams that are pulling other documents, reviewing different documents for our commercial areas that we're not quite as automated as we want to get. So we're looking at solutions to make improvements there.
Yeah, and that appears to align with a lot of the responses that we're getting so far from our audience. So what I'd like to do is dig into our top business banking trend for 2026 and talk about how digital onboarding and self-service accelerates growth for financial institutions. Your business clients expect digital self-service, less friction, less reliance on support, and full feature access from day one. But businesses exist on a pretty wide spectrum, with sole proprietors and small businesses at one end of the spectrum expecting fast access to turnkey digital solutions that just work, while your larger commercial clients on the other end of the spectrum often expect hands-on, white glove support. Commercial onboarding is all about balancing high tech with high touch and knowing when to pull each lever depending on your client's needs and expectations. So a question to our panelists. Deanna, I'll start with you. How are you approaching commercial onboarding and self-service for these two very different segments of business clients? Your sole proprietors and small business who want fast digital access, and your more complex high dollar commercial clients who expect a more hands-on white glove experience.
Well, Taylor, we definitely have three distinctive approaches that we're using today. Definitely high tech, high touch is the way that we're going. When we looked at really what our most of our accounts that were being opened, really about 80% are those sole proprietors or single member LLCs. And so having the ability for them with simplified ownership, being able to use our digital platform and in somewhat of a hybrid mode where we do have some team members monitoring that application system, it works pretty well for that. But when it gets to, I would say, our more complex commercial level clients, we do wrap a team of business bankers around them with some treasury relationship managers. And we liken it to really what we call rolling out the green carpet, where we try to really bring the institution to the member, whether they've been a prospective member of Valley Strong for a period of time and they're now beginning to move their banking to us. We typically try to make that a really simple manner where we'll collect the information. We're even using, as an example, DocuSign to get documents out to multiple business owners and signing information today. And that's really worked and enhanced our ability to onboard really efficiently. And knowing your member for us that way works really well with our relationship managers, doing a lot of that KYC. Now, of course, the third portion, we still have quite a few of those small business owners that will walk into a branch. And our branch team is trained really well where we have integrated some of our new account platform with Salesforce today to make that process go a little bit seamlessly in the applications, not just for our members, but with our team members as well. Trying to reduce, we call it like the swivel chair piece that, team members having to go into multiple applications. When we can simplify that for both parties, I think that's when organizations really start to win well when they're in that version of the onboarding as well.
Yeah, thanks, Diana. And Bobby, how is Trinity Bank approaching the same challenge?
Taylor, we are, I would say, approaching it from where can we make the less friction for our customers' point of view. And currently, right now, we're a very hands on bank from the aspect that most of our referrals and customers are brought in through our lending staff, our lending side, and it's about the relationships that we have built. So we are primarily hands-on white glove. Our treasury management teams go out, they visit with our customers, they make personal deals, and then we come back to the office and we've really worked to automate that process. One of the things that we have put in place is the ability to send out a request to our customers. They can automatically upload the documents that they need to open accounts. Those automatically flow into our account opening system and our imaging system so that our teams can start the process of opening those accounts. And then sending those information and those account documents back out so that they can automatically get those signed and back to us and brought back in through a similar system. One of the things that we're in the middle of looking at now is how can we automate that even more on the account side, where we can utilize a Mantle or one of the other account opening systems where we can start an account, send them a link, let them finish it, and make that a friction-free process where some of that KY and B and stuff is done in the background, where today it's a manual process. So those are our long-term goals, but I don't know that we'll ever move off of the white glove. We're going to go out and visit and we're going to go through that process unless our customer base or our strategy changes in how we're going to handle those. But we will always look for ways to make our teams more efficient so they have time to commit to those personal relationships.
Yeah, I mean, you nailed it. You have to be able to meet your clients where they are and position the right solution based on their unique expectations, etc. And so, Deanna, quickly, Bobby talked a lot about investments that Trinity Bank is considering in 2026 and beyond to drive, kind of more value, not only during the onboarding process, but also during, kind of what follows. Can you talk about the role that you see digital onboarding playing in accelerating growth, for Valley Strong, maybe some investments that you're thinking about in 2026 or beyond?
Yeah, we're absolutely always trying to, as Bobby was saying, remove some of that friction. And you think about how swiftly technology is evolving right now. When I think about the platform that we implemented about 4, going on maybe 5 years ago, it's already to the point where it's moving, technology is moving so much more swiftly that we're now looking at different platforms or different third party fintech partners that can intervene and help us move those items along a little bit quicker. For example, even in part of our onboarding, utilizing Plaid so that funding can happen quickly. Part of know your member in the background that's running. But if we can remove some of the steps that it does take to get that onboarding going a little bit faster, that's definitely on our agenda. I think you have to continue to evolve and going back to meeting your customers where they are in their moment. They're going to demand really efficient processing and efficient onboarding. So, the more I think we listen to our customers and how they want to do business with us and pay attention to our competition as well and what's going on in the technology landscape. I mean, AI is going to continue to help us with this as we learn more of how to embrace some of the technology. So, our eyes and ears are always open, Taylor.
Well, then that's, I think, really good feedback for our audience, right? And incidentally, a nod to a topic that we'll be talking about in a few minutes around AI. But before we get into that, um, let's move on to the number two business banking trend for 2026, which is always on fraud protection, and discuss how fraud prevention and mitigation can become a competitive advantage. Now, I'm going to make the most obvious statement in the world. Fraud prevention is a major challenge for financial institutions, right? Fraudsters are intelligent, persistent, and relentless. They continuously develop new methods of attack. They learn, they iterate, and refine their methods, and they quite literally never stop, creating millions of dollars in fraud losses for FIs. And to combat these threats, financial institutions expect digital solutions to be able to surface suspicious or anomalous behavior in real time, take preventative measures and remediative actions. They expect digital solutions to automatically apply risk based controls and dynamically adapt as threat vectors and fraud patterns change. But what if they did more? What if your digital banking solutions could help you build trust and stand out from your competitors? So, Bobby, a question for you. How is Trinity Bank positioning layered security, things like real time monitoring, client education, even non monetary approval workflows, as a way to build trust with your commercial clients?
Taylor, I think, in today's environment where fraud is, like you said, impacting our customers regularly on an ongoing basis, we have customers that have fraud and we think we get it taken care of. And then immediately 2 months later, they're at it, again, or something else has came up. It's frustrating for the customer. It's a challenge for us operationally as a bank, and where do we find the middle ground that we can deliver a service that's more proactive than reactive is solutions that we're looking for. And I think that goes to your point that you've got to have more and more systems that are real time based, that are providing immediate response to the bank and to the customer that says, you know, this transaction may look a little fishy. This information, this one field was changed. It's out of your norm. And I think there again, that's where the AI pieces we're seeing with other fraud systems leveraging that AI capability to deliver real time, immediate response to transactions as they're processed through the system. So our goal is to continue to try to layer that in. But it also builds trust with our customers. It builds and makes our relationships much deeper with our customers because we're proactively reaching out and going, you got this check in way before that the customers have seen it even hit their account that says, hey, you're going to have a check hit your account. We believe it to be fraud. Uh, Please be sure to review that. So that's that white glove treatment that we feel adds layer and value to the relationship long term for the bank.
Makes a lot of sense. And Deanna, I guess I'd like to ask you the same question. How is Valley Strong positioning layered security, including client education, as a way to build trust with your commercial members?
Yeah, Taylor, similar to Bobby, we too are offering solutions out there to protect our member. Obviously the main one that's been out there for a while is positive pay. But what I find is still that we need to partner with our specific members to do the education piece, not only around what fraud looks like today. We've done some educational workshops, even with our local FBI agents who run in this fraud area, to educate our customers on what this looks like today and trying to really explain to them. Some of our members are mom and pop, right? They may have some home based technology where they're not aware that, if they buy a PC right out of, let's say, Home Depot or Best Buy, are they really thinking about security as well and firewalls that potentially corporate email takeover can happen? Because without having a partnership together with us, we're not going to see everything that's going on as well. And so when we educate them around making sure their systems are secure as well, we partner with them in offering, positive pay. We've got multi-factor authentication that's happening. We have a team, when they're uploading payments or we're reviewing exceptions, they will reach out, to the member and say, "Hey, this looks like a little bit of a fishy situation here in a payment coming through." Or duplicate transactions and things of that nature that we still have to work, I think, in partnership with our customers, but continue to educate them, and not only the owners but their employees as well. And when you think about, sometimes employees transition in and out of companies, and to educate them what to look for. When invoices and things with ACH can be changed so quickly out there by a fraudster, in a moment's notice, money's going out to a different institution that wasn't expected. So the multi-factor authentication, dual approvals, we're utilizing all those items that are available to us, and always open to any future technology that's evolving that will continue to help us combat this along with our members. So we have to be on our toes every day, it seems like.
That's the truth. And a quick follow-up question for you, Dana. You mentioned positive pay a couple of times. Have you explored charging, like, actual dollars fees for fraud prevention tools like positive pay or others? Or maybe you already are, right? Um, in either case, and it sounds like by your response you do charge for it, how do you think clients perceive value in these solutions? And if so, how are you navigating that pricing discussion? I think the audience would love to hear some of your kind of recommendations in
Yeah,
that area.
many of my experience, going back even to the my prior history before coming into the credit union industry, have been charging, and businesses are used to paying for the value that these types of services bring. And when you think about when a business owner is hit by fraud, and it's, as an example, let's say it was their computer that was attacked, it's not necessarily the financial institution's fault as well, right? So trying to partner with them and understand if they're going to take a loss. And many financial institutions may make their member whole, or work together with them. But when you see a major loss happen, they're going to want to figure out, how do I protect myself and not be a victim of situations like this? So if you can put that control back in their hands, it gives them a little sense of authority that they now are in control of what's going to come in and out of their account. We've set them up. They're willing to also pay for, like, the ACH fraud filters and blocking anything that shouldn't be coming through, out of their account. So the more we educate, and they're seeing the value, and and we're very competitive with it. We're not going to gouge our customers for this service. But we too, as an institution, want to battle the fraud as well and reduce as much of the losses that we're seeing out there. So it's a partnership.
That makes a lot of sense. And as we shift gears here, both Deanna, you and Bobby have mentioned AI at least once, right? And so, incidentally, that's our number three business banking trend for 2026. But before we dig in, I have another poll question for our audience. And the poll question is: how is your institution currently using AI to support commercial relationship management? Maybe you haven't started exploring it yet, or maybe you're researching AI use cases and building internal buy in, or maybe you're piloting AI tools for client insights or predictive analytics, or maybe you've deployed AI to support customer outreach, portfolio management, maybe even churn prediction. Or maybe for some of you, AI is fully embedded into your commercial workflows and strategy. So, while our audience ponders this in response to the poll, again, I'd love to hear from our panelists. Bobby, I'll start with you. Where is Trinity Bank on the AI adoption spectrum? Are you watching from a distance? Do you have your toe in the water, eager experimentation, or are you all in? Where is Trinity Bank in the AI journey relevant to this poll question?
Taylor, that's a good question. We are kind of in between, I would say, B and C. We're building some cases for how we can use AI. We're looking at the tools that are out on the market. We've already integrated some AI in some of our other fraud risk and account openings. We've used some, AI OCR on some of our imaging of documents to assist our staff. So we've kind of got our toe in it, but nothing that's really customer facing. It's not used actively in currently in the bank to produce documents that would go out to a customer or any of those kinds of things. There's a lot that AI requires from a security standpoint that we've got to make sure and be comfortable with that risk. So those are all layered things with AI that we're struggling to figure out. How fast do we move? How do we do it right? Because we don't want to make a mistake. It needs to be a product that's accurate and delivers the expectations that our customers expect from us and from our team as a whole. So AI is one of those tricky avenues, but there's definitely some great AI tools out there, and I think fraud is one of those areas where AI is a no-brainer because it can take and evaluate things way faster than the human, and overall the accuracy is pretty good. So we're looking to utilize those tools to make us better and to better protect our customers in all of those different channels.
Yeah, it makes total sense. And Deanna, same question for you. Where is Valley Strong in your AI journey?
Yeah, I would say, Taylor, we're somewhere right around the discovery, looking at use cases, wanting to move towards a pilot around our commercial loan portfolio and relationship management. For institutions that are managing a portfolio that's seasoning, you've got to go through the renewal process with your credit facilities. And that's the process annually in many cases that it does take time to go through that, where you're reanalyzing a client's financial documents and where are they, where's the health of the company. We have definitely looked at some AI agents and to figure out how can we utilize our financial analysts software, utilize a hub that can collect those documents using OCR, and then deploying that information or that AI bot on those documents to really highlight the key areas within that company's financial position, now in the next year that they're coming for annual review. I think when we can get to Bobby spoke around the accuracy piece, that's the part that we're testing right now and how it might be able to be embedded into a credit presentation, then that can go, for approval to a credit committee or something like that. But also, having the ability to talk with your clients a little bit easier with secure technology where you can send a link out to them. They can respond with their documents, talking right to a loan origination system and then analyzing all at the same time, where hopefully that would create some better efficiencies and speed of time with our credit team so they can focus on newer applications and not necessarily having to spend the length of time they do on renewals. So we're really hoping that that pilot test will bode well. But again, it's still new technology and trying to figure out how that's going to work for us.
Yeah, opportunities abound and, maybe not so ironically, this is planned. This is an excellent segue into our number 3 business banking trend for 2026, AI-powered relationship management. Personally, I strongly believe that AI can and will be a differentiator in the commercial space. And we often talk about AI in terms of automation. I'm certainly guilty of that, and for good reason. Using AI to dynamically personalize user experiences, to automate fraud detection and facilitate redundant user actions. Those things will certainly be game changers for our industry. But it also has the potential to change the way financial institutions manage relationships. For example, it could enable financial institutions to identify growth and expansion opportunities more quickly. AI might enable institutions to better understand business cash flow patterns so that they can proactively and better serve their commercial clients. AI can help financial institutions better anticipate and respond to churn risk, personalize client outreach and engagement, and strengthen commercial relationships at scale. What's a community financial institution's biggest differentiator against mega banks? If we polled everybody would say some version of the same thing. It's personalized service, right? That is what separates community financial institutions from mega banks. However, as foot traffic in the branch is replaced by digital traffic and online banking, many institutions are struggling to deliver the same level of personalized service to their clients. So, Deanna, I think an interesting question here is how are you thinking? You mentioned a lot of opportunities specifically around AI. I'd love to understand how you and Valley Strong are thinking about using AI to support business clients in particular via digital channels, while also empowering your relationship managers to better engage large commercial clients via traditional channels. Any
Mhm.
thoughts there?
Yeah, sure, Taylor. I think one of the areas that we are utilizing and have been working with it to see through pilots with some of our members is actually utilizing transaction information running through their accounts, which will predict their cash flow patterns, allowing them to see, when funds are coming in and when are they going to have some low points in their cash flow cycle. And can we position different working capital, like, for example, lines of credit out there or different vehicles for them on the lending side to assist those low points? And so I think putting some of the cash flow information out there with them where they can connect some of the vendors that they work with to figure out what that looks like from scale. And as you know, many of our clients out there don't just use one institution today. I mean, we'd all love that they use one, but many of them are using multiple institutions. So if you can pull that information in for other organizations into, one-stop hub for them to the best of your ability, it begins to give an overall clearer picture, I think, for the business owner. So I think the more that we work to not only use that information on the financial institution side, but to offer those types of solutions to your clients, you're going to find a way that it becomes a sticky product and a staying point to keep your customers, coming back to you for more. I think technology that's going to help them run their business on a day-to-day basis. I think the more it evolves and we can utilize the scale of what both companies are learning, whether tech side's using that information to learn to allow the technology to evolve. It's getting better and better all the time. So I think that's the evolution.
Yeah, for sure. And Bobby, I have a related question for you, right? Earlier, we talked about different segments of business having different needs and expectations. For example, sole props and small businesses wanting self service, and larger commercial clients expecting hands on white glove service. Now, I know Trinity Bank's business portfolio is largely large commercial clients. And as you mentioned before, they expect and you deliver a lot of hands-on service. What I'd like to maybe hear from you as a thought leader is how you see AI helping financial institutions support both of these segments. Any thoughts on, kind of trends or maybe sub-trends that you see kind of going forward in the future?
Well, I think Deanna touched on a lot of great things. The cash flow is, is a great opportunity to provide and have information available to our teams, in particular for our larger customers, but also we see it for some of our smaller customers, right? That aren't quite as well educated or may not be quite as versed in those kinds of things, but they're kind of growing into those. So, right in that middle market piece, where can we educate those? Because our large institutions have big teams that support their accounting and those kinds of things. The small ones just quite aren't in that league, but we do have a good swath of our customers that are kind of right in that middle range. So, what can we utilize AI to better educate them, provide them better tools, learning how to cash flow their businesses? Those are opportunities that our lenders go out. But if they have more data and more things to back them out when they go out and make those calls, or our treasury team has that data that says, we see you make a lot of transfers or you're moving a lot of money around. Can we help you consolidate that or make that a better process? Those are the kinds of things that I believe AI will provide, is the insight that we sometimes lose in day to day just operating. And, here at Trinity Bank, being a $550 million bank, we're not very big, and we're really only staffed with about 30 or so employees bank wide for a 550 million bank, which means we run at about an efficiency ratio in the low 40s. So, there again, that compounds how we do business. So AIs, we've got to look to this that says, how do we maintain those personal relationships and deliver what those customer needs? And I think taking AI and analyzing data and analyzing movement of money and what the customers are doing and totally understanding that, and then having the system that provides a simplified overview of what that is, gives our officers and our treasury teams the ability to walk in the door and have some touch points to build on that relationship. So I think that's really where we're going to see the value long term, and that's one of the long term visions that we want to integrate in our path forward.
Yeah, yeah, and, you both kinda commented on the power of AI to democratize data and to arm not only your clients, but internal financial institution personnel with more data that enable them to better do their jobs. But Bobby, you also mentioned something that I wrote down here as another differentiator. You talked about, you know, that many of your business clients are large and have big staffs, but you also have smaller business clients that don't have as many people. And it made me think about the transformative nature of AI and its role as a force multiplier with not only institutions, but for example, small business being able to play in a different league, right? Because now they don't have to be as reliant on a larger staff to deliver that caliber of business. I think AI is really going to drive us to challenge a lot of conventions as we go forward. Um, Now, we could probably spend the next, 20 minutes on that alone, but, I'm under a time crunch here. So let's move on to business banking trend number 4 for 2026, which is real-time payments. RTP continues to be a huge topic of discussion for financial institutions, but my question in 2026 is, will we spend as much time actually implementing RTP and FedNow as we spend talking about it? While real-time payments represent an obvious benefit to business customers, most financial institutions are still hesitant to adopt it. In fact, 80% of financial institutions who offer RTP today are receive only, which isn't very surprising considering the operational challenges that RTP creates for an FI. Unlike traditional payments, real-time payments run 24 by 7, 365 days a year, which fundamentally changes how an FI has to operate. Liquidity management becomes an always-on responsibility. If a business wants to send a payment at 2 a.m. on a Sunday, the financial institution has to be confident that the funds are available and that controls are in place to prevent failures or overdrafts. Fraud and risk also look very different. These payments are irrevocable, which means there's no float, no recall window, and very little room for error. Financial institutions need real time fraud monitoring, tighter transaction limits, stronger authentication, and clear exception handling, all of which require new tools, processes, and oversight. Then there's the operational lift. Enabling RTP isn't just turning on a new rail. It requires deep integration between your core, your digital banking system, and your fraud systems. And finally, there's the customer experience. Once you allow businesses to send money instantly, they expect instant answers when something goes wrong. That raises questions around after hours support, staffing models, how exceptions are handled outside of business hours. That's a lot to take on. And incidentally, neither of our panelist institutions have adopted formally RTP yet. So I think their feedback is particularly relevant here. So, Bobby, I'm going to start with you. What would need to be true to make RTP a priority for Trinity Bank? Or maybe to ask it a different way, what's currently holding you back? I'd love to have you kind of explain your situation and how you're looking at it, because my guess is there's a lot of members of our audience who are in a similar position.
Well, Taylor, I think you made in your lead up to and going over just RTP in itself, it as you stated, there's lots of challenges there. And for a bank of our size, those are at times feel daunting and overwhelming, right? Because you've got staffing, you've got real time, you've got all of these things that you've got to now account for operationally. Um, and it's not as just simple as turning a switch and going, okay, we're going to go live with this. There has to be thought, there has to be planning, and you have to do it right because I'm sure everybody on the call is aware that there's been some institutions that's had it and have not been successful at it, and unfortunately have paid a large price. So, from our standpoint, we're very conservative from our point of view. We're focusing on it. We're learning about it. Do we have a game plan that says we're going to go alive in 2026? I don't believe it's going to make our 2026 roadmap, only from the aspect that there's too many unknowns. I don't know that there's enough tools out there to help support a bank like us to address a lot of the things that you mentioned in the path. We're looking at them. We still believe that there's viable tools that are out there today, such as same day ACH and other tools that have better mitigation and risk controls than RDP that's out there today. That there's not a rush for us to jump on the bandwagon. And to be honest, we have not had that many of our clients demand or question or bring up that says this is something that we're interested in, because it also opens risks for them. It is a faster collection of money, and it does help the cash flow, but that cash flow works both ways. So, there's some that are hesitant that says, I don't necessarily want to pay my invoice same day, right? I want to hold on to my money, at least a couple of days or those things. So there's triggers in there that have to be reviewed and put in place before you just jump into the pool.
Yeah, yeah, makes sense, and I'm sure there's a lot of heads nodding in the audience. Deanna, same question for you. What would you add to that, and what would need to be true to make RTP a priority for Valley Strong?
Yeah, I think we're very similar to Bobby in the level where we are right now. I think they're just for us to have has not been as large a demand for real time payments right at the moment. However, how we're thinking about it, we need to look at it not just from real time payments, but from a broader payment strategy overall. We run a lot of different business units, not just business, but consumer, mortgage, wealth management, things of that nature. And how do people want to move money? If you think about business owners, we talked about the smaller population, the sole proprietors, they're looking for a consumer based business environment as well. And the more comfortable the native technology business owners are, I think they'll continue to want to demand, the Zelle payments of the world and Venmo, the ability that they're seeing to move money so instantly. It's coming. And whether it's today, I wouldn't say quite today, but it will be here in the near future. And the more that the technology gets stood up around it, talking about what it would really take to service real time payments today, our back office would have to be skilled a different way, and training's going to have to evolve. But the fraud piece of it has to be there as well to make sure we have the ability to combat that, because it'll be there. If we're thinking that it's not, it will. So you have to have the ability to control that piece of it. And I think just the technology in general and the demand would have to be there for us to put a little foot on the pedal to bring it up sooner. But for us, we're thinking about it from a bigger strategy, not just real time payments.
That makes sense, and you alluded kind of in your response actually to, kind of our last topic of the day. So I'm gonna go ahead and advance us forward to talk about that last topic of the day, which is the number 5 business banking trend for 2026, delivering consumer-grade experiences to business users. Now, I love this topic because every one of us attending this webinar has something in common. While we rely on corporate software at work, core banking systems, CRMs, HR platforms, we're all consumers when we're off the clock. Our experiences with Spotify, Netflix, Amazon, even Uber Eats shape our expectations as users. For years, enterprise software has been given a pass on user experience. I mean, just look at most core banking systems. They prioritize function over form. This is true of many of the tools we use at work, where the bar for usability has traditionally been very low. Meanwhile, consumer apps have continued to raise the bar, widening the gap between the experiences we have at home and those we tolerate at work. Now, the same is true for your commercial clients. While business banking is vastly more complicated than retail banking, business users expect a simple and intuitive experience that doesn't surface the inherent complexities of business banking. When your business users log on to digital banking to manage their personal finances, it's simple. However, when they log on to their business banking account or business banking platform, suddenly they need a PhD in ACH. Business user expectations are changing. Actually, I don't think they've really changed. In 2026, I think they're just going to become a lot more vocal about it. But that's just my opinion. So I'd love to hear from our panelists. Deanna, do you see digital experience as a core differentiator for your kind of business offering against fintechs and mega banks?
Absolutely, we do. You hit the nail on the head there, because they want to see the same environment with us as an institution. And why are we not evolving as swiftly as they are, or making it a little bit more user friendly, or paring it down to different levels of users, right? So Bobby touched earlier on, business may be a single owner and maybe one employee, or then you get to what that looks like if they have other people within their organization running accounts receivable, payable, those types of things, right? So that individual business owner that's running swiftly, lean and mean, they're going to want those tools at their fingertips because they're wearing many hats as well. So if the technology can work for them where they can do a lot of what they would do on the banking from their mobile phone, just as they would if they were in front of their computer, that's what they're looking for today. I think the tools that we can serve up and still manage fraud for them and make it easy for them, that they can spend their time quickly in the platform and move on without overcomplicating it, the better they'll evolve. But I think we have to think about it from going back to meeting them where they are and what they're required and looking at that user experience, but also getting their feedback. I think oftentimes we make some assumptions as institutions of what they really want. But the beauty is when we talk to our clients and really ask them to pilot things. What do they think? Get their feedback. I think that's when we really learn what's important to them and how they want to do business with us.
And quick follow-up, what are you actually hearing from your business clients as you speak with them, especially, your younger business clients or your digital native leaders? What are they saying about digital platforms?
They're wanting, again, going back to that Zelle experience, the Venmo experience, the different cash pay apps that are out there. They are used to seeing their clients ask them, "Hey, can I pay you this way?" Or wanting to be paid by some of those other platforms. The problem is it makes it difficult when it comes to put their balance sheet and income statement together. It's not as easy to reconcile those types of transactions within their financial reporting. So when it comes time for them to, file their tax returns or need a loan for some capital, they may not necessarily have very clean financial documents, to work with their institution. So it's a bigger problem I think to solve for them, but software out there such as Autobooks, that helps with invoicing and building some of those financial documents for them, to simplify things. I think that's where the technology will meet them where they are.
So, Bobby, kind of related question. Are there specific industries or business sizes or segments where you think a consumer grade experience makes the biggest difference out of curiosity?
I think long term, the goal I see is that the consumer experience is going to make its way from your mom and pops all the way through some of your large companies. I think it's going to progress, over time. But I think the demand right now is probably your mom pops, your medium size. You know, when you talk, one of the things that was the tops on the slide was Treasury mobile, right? I think long term, that functionality for our in particular art some of our entrepreneurs who own multiple companies who are on the go that aren't in the office and don't have teams behind them, they're looking for those applications to be able to do from their truck or from wherever they're at. They need to be able to balance their business and run their business. And um, you know, we as an industry, as a banking industry, we've kind of been behind, to be honest, in that technology. It's been out there. Our fintech competitors have proven that it's there and it can be delivered. Getting that integrated into the applications and the systems that we use are going to be key, and it's something that we have been strategically focused on for the last 4 or 5 years that says we're looking for those. On the large end of that scale, we're also looking for our a system that will allow the accountant or the bookkeeper or those to have screens that are customized that they can only see what they want to see. They don't have to see everything else. So I think that goes back to the consumer that says, let me see what I want to see. I don't necessarily want to see what the wire person's doing today because I don't really deal with wires. I really just want to deal with ACH and I want to check balances. So I want a screen that shows me those kinds of things. So I think that's really where the future is, and how you balance and how you get there. It's going to be an evolution, but it's definitely going to take place because as the younger generations move up, it's going to be demanded.
Yeah, I wholeheartedly agree with kind of your statement that, you know, this trend is coming. Like right now, we may look at business as a spectrum, with small businesses, expecting, kind of more consumer retail like experiences, and larger commercial entities being on a far other end of the spectrum. Well, that gap is shrinking, right? And it's because we're all influenced every day by the apps that we use. So everyone, regardless of context, wants more personalization. They want higher speed. They want to have to think less, right? And so I think this is critical. But also taking this full circle, we've talked a lot about the business client experience. What about your employees? Bobby, how important is it to give your staff the same consumer grade experience they expect in their personal life? Talk a little bit about the impact that you see there.
Well, there again, I think this goes back to, and I can say this because I'm probably the oldest one on the call, right? Generations, as they trend younger, what their expectation and what they interact in. You're talking generations as we go to hire new employees that grew up with a tablet in their hand or a phone or those kinds of things. So they don't know anything else. So from a training of our employees and those and how they're used to operating, it's important that our systems meet those challenges because those are the people that are going to be running them. So it's key that everyone in the systems can't stay stagnant. That they've got the backsides and the customer, the employee experience has got to be just as good as it is for their customers, because in reality, our employees are servicing those customers. And in reality, they're also customers. So they have insight into what is expected and what's being delivered. So I lean on my younger members of our staff to provide me insight into what does that look like.
Yeah, it's something I don't think we talk about enough. Granted, we all tend to over-index on our clients, but I'm glad we're including this in the conversation. We're kind of up against the time limit here, so I'm gonna continue forward to our final poll question of the day for our audience. And the question is, are you interested in seeing a demo of any Alkami solutions? You've got a lot of options here. Alkami supports the entire customer or member lifecycle, helping you win new clients, onboard them efficiently without sacrificing risk, delight them through self-service, and safeguard their accounts and assets, all the while enabling you to proactively engage and expand client relationships. So if you're interested, please indicate it in the poll, and we will follow up shortly to provide a demonstration of the solution or solutions you're interested in. Now, to close us out, I'd like to hear one takeaway or piece of advice from each of our panelists looking ahead to 2026. So, Deanna, let's start with you. What's one takeaway or piece of advice you'd give to financial institutions looking ahead to 2026?
I would say always keep an open mind and to help your organization evolve, because if we don't, we're going to be left behind.
Bobby, same question. What's one takeaway or piece of advice you'd give financial institutions in 2026?
It kind of goes along with what Deanna was saying. One of our focuses for 2026 is to get back in front of our customers, right? We want to hear what they think is working and what is not. Where are we missing the mark? What would they like to see? What does that look like? where are their frustrations and what can we do to address those. If we're not aware of that, then we're going to fall short, and that's not something that we find acceptable.
Yeah, I'll double or triple down on that. Deanna mentioned, Valley Strong's focus on, talking and listening to clients earlier in the conversation. My opinion in 2026, financial institutions should prioritize client conversations to guide decision making. Financial institutions should avoid assumptions and ensure technology investments align with their clients' actual needs, right? So I think that's a message that we have all shared multiple times, and I think a good piece of advice for any attendee as they exit this call. Now, again, before we close out, I'd encourage everyone in the audience who wants to download our full report, The Top Trends Shaping Business and Commercial Banking in 2026, to use the QR code on the screen to download the full report. So I'm going to give everyone 10 to 15 seconds to snap a photo of that QR code. And I'm dragging this out. I want to give you time to do this. And so if you haven't done it by now, chances are you're probably not going to. So I'm going to go ahead and sign us off for the day. I want to thank everyone for joining us here today. And I'd like to extend a special thank you to our panelists. Thank you, Deanna and Bobby, for sharing your unique insights to these key business banking trends and helping our audience identify high leverage opportunities for their institutions. I think it's been a great discussion, and I appreciate you spending some time with me.
Thank you for having me, Taylor.
Of course, anytime. All right, and thanks to the audience. I hope you found this meaningful and interesting.